The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I got two questions. I guess I get some of these questions because I've been around for a long time. As you know, I worked at Drexel Burnham in Beverly Hills there for quite a while, 6 years during 76 through 82. And the question is, was there any celebrities that I wanted to meet that I never did? And I had to think about it a little bit. And the answer to that, yes. And in order of importance, number one was Joe DiMaggio. I came close twice in New York, but didn't quite get to meet him. And I saw Jamie Lee Curtis quite a bit. She hung out over at the Manly Hall's Metaphysical Institute up on Mulholland. But number one was Joe DiMaggio. Number two was Sean Connery, and number three was Clint Eastwood. Sean Connery, I saw him several times, but I didn't want to bother him. He used to hang out at well, he still does. Still plays golf at the Riviera Country Club there in Pacific Palisades in Los Angeles. Those were the three. The story about Kirk Kerkorian, I think I've told that too many times. I guess I could tell you that one morning, real early in the morning, it was about 5:30. I'd gotten early, and 5:45 probably. I was at the Drexel office, and the only people there that early in the morning was the wire operator and the security guards. And somebody was banging on the door, and the security guard called me, and he said, "Can you help us out here at the front door?" So I went out to the front door, and there were three guys standing there trying to get in the building. And I recognized, Ty Ganders because, he was my customer and a very good friend. And with him was Mike Connors, who was a very famous actor, played Mannix and a whole bunch of other things. He was also my customer. And the third guy was Kirk Kerkorian. These guys were buddies in Fresno, California, and they were known as the Fresno Indians around Los Angeles. And so they had some papers that had to be taken up to an accountant, and they were on their way to go somewhere, I guess, play golf or whatever it happened to be. So we let them into the building and everything, and then that was about it. But many years later, I don't want to go through that story again. It's not important. Let's the second question that someone asked me. Oh dear, now I forgot what the question was, and I wrote it down. Where's the note? What was one of my one trade that I remembered more than all the others? And that's really a hard one, folks, because I've done thousands of them over the years. But without a doubt, I think it has to be the egg trade of 1972, because I still have the slip from the Conti Commodities on the execution. It was a Friday, and on that Friday, at the end of the day, the U.S. government came out with their egg buying program for the following week, and the egg market was responsible. The government was responsible for 80% of the action, maybe even more than that, of the action in the egg market. And the report that day, as it came out, was the fact that the U.S. government was going to buy every egg from every chicken in the whole world. I mean, it was such a incredibly bullish report that no one could believe it. And I was long 8 contracts, and they were saying eggs would be up the limit several days in a row, which at that time I believe it was about $4,000 a day, something like that. And so I was real excited. So I went down to Beverly Hills, and there was a haberdashery place called Maury's. I can't remember his last name, but it was right there on what was that street? Not at Rodeo Drive, the one, Camden. And this is where a lot of the celebrities would go in and buy. Just to give you an example, This was 1972. A polo shirt, really nice silk or cotton polo shirt would run $150 to $200. A pair of slacks would be $300, and he had this beautiful Western leather jacket, blazer type, and it was just about $700. And so I was bucks up, so I says I've got to buy this. So I bought it and took it home. And Monday morning, when I went into the Conti office, Roy called me over and he said, "Hey, you better go read the Reuters machine." I said, "Why?" He said, "Well, they've changed the egg report." And I'm thinking, oh, they've added even more eggs. Well, there was a couple of typos in the report, and not only were they not going to buy as many as they have in the past, they decided not to buy for the next 30 to 60 days, and eggs went down the limit 3 days in a row, and that jacket cost me a whole lot of money. I never could wear it. It had such a bad stigma. About 5 years later, I gave it to the church, St. Jude's, for a reverse auction because it had never been worn. It still had the tags on it. So I still remember that. Anyway, let's move on. We'll take a look here at the DAX. I've posted it. As you can see, we've had a little bit of a rally. It's backing off a little bit. Same thing that we're seeing in many of these other markets. The FTSE is an interesting one because we had that really nice rally yesterday from that pattern we were talking about. I want to get it up here so we can take a quick look at it. We went up to that 7,200 level, and remember the high on this was 7,800 way back in late January. So this is just really a very, very shallow bounce. But what's important about this one, folks, if you'll go back, and this is a 30-minute chart going back over the last several days, you'll notice that both of those rallies there that form that parallel channel are exactly equal. And that's another, idea of the market or premise of the market that we look at with pattern recognition that was covered in Dr. Andrew Lowe's book, The Secret, the Non-Random Walk Down Wall Street, that markets not only do they repeat, but they are predictable within limits. And that's what we're trying to do here as we look at some of these things. We've got a bunch of things. Oh, we got a caller from California. Daryl, how are you?
Good morning, Larry. How are you? I was just curious your thoughts on the S&P. Or that seems like the market that's kind of been moving here. So I don't know if you talked about it yet this morning, but
yeah, we'll do that. As a matter of fact, I've covered that. I've covered the DAX and the FTSE. So let's just move on to the S&P because this is one of the things that we look at every day. I think the better thing to trade in the world of trading is the the euro, because euro or yen, or the euro and the yen especially, because they have such great moves and they're not bothered by the Federal Reserve. But let's take a look here at the S&P. Remember in the newsletter, folks, we talked about this yesterday. That level down there at 25.35 was very important because it was a perfect 61% retracement, and now what we're looking at is a situation where we rallied very strongly, and the high that we hit yesterday, folks, was just absolutely spot on, 61% retracement. Let's try it again, Larry. It was a 382 retracement that I'm going to show in just a second. But over the past, this is a 30-minute chart. So over the past 10 hours or so, you see we made a little bit of a Gartley down here at this 26.38 and then rallied. Stay with us, and I'll be right back, and we'll finish up with this E-mini and get on to some other things like gold. 877-927-6648. Thanks for calling in, Daryl.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking about the E-mini S&P, and we had this big rally that started on Friday in the last hour of trading, coming right off some major ratios. Those of you that listened to the show yesterday or take the newsletter, we highlighted the six major markets and how they all hit right at the same identical spot, only different ratios. I mean, they were perfect ratios, either 786 or 618. And these were going back from major lows like the solar eclipse that we had back in August. So that, tells you that the cycle is very, very important. But as we look at the E-mini here, we've had a 38% rally yesterday. Now, it did it in 2 days, which in itself is a very, very important spot to look at. So if we go down and make new lows now, below lows of last week, folks, that takes us down another 3,000 points in the Dow, and I forget about another 200 points in the S&P. Hey, we've got a caller in from Philadelphia, Pennsylvania. One of our favorite Tiger Den folks is John from Philadelphia. John, how are you today?
Go Kirk Kerkorian.
Yeah, he's a class act. Let me tell you, he's in fact, I've only met two billionaires in my life, and he was one of them. But he was a really nice fellow. His best.
I like hearing those little historical tidbits. The Fresno Indians. That's something you won't hear often.
Well, that's what they were called back in those days, but they're all gone now. They've all gone up to that big Indian reservation in the sky. What can I do for you, my friend?
Could you please help us with the dollar-yen, USJY?
You betcha.
Larry, the dollar-yen, USJY, hit a low this morning at, 107.40. That is an exact exact test of the low back September 8th at the same price, 107.30. My question is, if If dollar yen falls below that and holds under that for any extent of time, where does it go, and what do you think is going on?
Well, the first thing I want to point it out to you, John, here is I put up the weekly chart here in the dollar yen, so you can see that we are at major support in this level. But I think for trading purposes and for trying to analyze the market, we really need to go down to a daily chart, and I'll bring that one up so folks can take a look at it. But as we look at this, going back to 2016, the 61% retracement on this comes in at the 106.80 level, which is about 80 pips from where we're trading right now. Now, we did take out the lows of about 10 days ago by just a little bit, but if you go up to the top of the chart there, you'll see the three 61% retracements that were hit over a period of about 7 months. The market could never close above those levels. What I think we're doing right now, John, is the exact opposite of what happened on the top. We're in this really tight trading band. And so what I'm doing is I'm probing, to see if we're going to make a bottom in here. The fact that we took out the lows of 2 weeks ago and didn't go down very much, to me, is a possible sign that it might be turning. And what we're looking at here, as you well know, because you've done this for many years, it's the amount of risk that you have to see to prove whether you're right or wrong or not. So the risk on this is very, very small. You're talking, around 40 pips to see if you're correct. So there's a possibility here that we're at a pretty substantial bottom here in this dollar yen. I don't see it going much below the 106.50 level. That would complete another ABCD going back over the last 10 months. So that's what I see right now. I hope that helps, but that's what I'm looking at.
I appreciate that. In looking at that weekly chart that you displayed, actually daily, everybody who's involved in this market in one way or the other, the Federal Reserve, the Bank of Japan, any big corporations, every commercial bank is looking at the same chart, so we all see it. I'm always reminded of one important idea in markets, and that is trading ranges are meant to be busted at some time, and the longer a range goes on, when it is busted, something big happens. So let me re-ask the question. Let's assume we get under 107 and hang underneath that without coming right back up. Where does it go? Where is it likely to go?
A lot lower. The ABCD
right, and my question is give me some parameters I can hang my hat on, just
sure.
So I've heard them mentioned, out loud. That'd be very helpful to me, please.
Absolutely. Let's just post this weekly chart here again in the den. They'll let the folks walk through it together. But if you'll notice here, back in 2015, we hit 1.25. If you remember when Tom O'Brien started talking about King Dollar, we were trading around 75 in that dollar yen. That was back in 2011. Scott, 7 years ago. But that was the big move down. And he was getting out of those positions in above the 122 level. And now if we look at this, there's a potential for an ABCD structure here going from 125 down to 100. That's 25 handles right there. You rallied up to the BC point, which is 118. You take 118 off 20 handles, you're going to be going down to about 89, somewhere in that ballpark, right around 90. So you're looking around 17 handles lower, just completing the ABCD pattern. The key level, the key level is at 106.50 level, is my opinion.
Yeah, thank you. That is precisely what I was looking to hear. Just to what I would call that, since we have been in this range, something like a move down to 100 or 90 and 89. I would categorize that as, quote-unquote, the unthinkable outcome. But with a market that's been range-bound like this, I'm always, I've learned over the years, be prepared for the unthinkable scenario. So thanks a bunch, Larry. Appreciate it.
You bet, John. Any other questions that you might have?
Why am I wrong in having shorted the E-mini S&Ps up at that fib 618-382 cluster that was that 2650 to 2665.
I don't think you're wrong at all. That's what the 2665, John, was the exact 382 retracement of the whole move down. Now we hit the 61% retracement, and we made the 382 in just 2 days, which could be a bullish sign, but the market stopped exactly there. As a matter of fact, in the Tiger Room yesterday, the Dudette from the UK was talking about that number, and I believe you were also, so several people were watching it, and that's when it was trading at 2640. So it rallied 25 handles right into that number and didn't go any higher. I mean, this is the exact type of action that you'd like to see if you believe in these numbers. So that's what it looks like to me. Now, we haven't collapsed from that level. We've only come off about 20 handles, but we're talking about 20 handles. All during last year, 20 handles, we didn't see those in any one day. Now we're seeing 2, 3, 4 times in a day. So we've got
exactly right.
We got volatility coming out of Kalamazoo, Michigan now. So we've got to pay attention, and your risk factors on some of these got to be increased from 6 points to 10 points. So I hope that helps, my friend. You bet. Thanks for calling in, folks. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at one of the charts that they have at Tiger TV or TFNN from David White and Tom O'Brien. showing the Gartley and butterfly patterns, and the one we're showing right now is the NASDAQ stock, ARQL. And as you can see, these are daily charts, and you can see the ratios and everything that are there. Now, this thing is really built for perfection, because you'll notice that when you see the 0.73 retracement there, it is just a tad below the 0.618 retracement. And when you're trading a stock like this, you have to be able to give yourself a little bit of leeway. The good part about this is that they scan thousands of these stocks, and then they send these to you before the market opens to show you what the patterns are. So it's really a great service. It puts the patterns in really nicely. You can see the ABCD structure on the way down. Now, it really helps to learn the patterns, of course, but it does give you a heads up on many of these stocks, because you can't look at everything, folks. I can only look at about 20 things, and that's probably 15 more than I should, but those are the ones that I'm usually following the most. Of course, I do, watch the gold with a great deal of anticipation always, but mainly, I look at the euro and the gold and the oil and the pound and the currencies. The currencies are by far, the best thing to to really look at. Let's get back to this S&P. After we posted that pattern, which was a Gartley, but it was on a 15-minute chart, you'll notice the strong support that we have here at the 2637. Now, if that breaks, that tells us that we're most probably going down, to the next level, and that next level is going to take you down to, quite near the level. Just put this up here so we can see it, right down to the 2600 level, which would be a 1.27 expansion of yesterday's mid-range from 2622 to 2668. I believe, 2670 was the exact high, and that would get you down to that level. So there are two levels to watch, of course, at 2610. But if we break out to the upside, which would be a pretty good indication that we're going to go higher, and this is what I hate to use the word hoping, because that's a terrible trading word, but I'm hoping for this rally to continue into the solar eclipse and new moon on the 15th. So that's going to be important. And of course, the day after that is the 16th, which is the start of the Chinese New Year, and we're going to be talking about that later on, of course, but we'll be watching it very, very closely. But we're assuming that we're going to get a little bit more of a rally. The $64 question is, what if we don't? What if all we had was a day and a half, well, not even a day and a half, because it was late on Monday that we had the big rally, but what if that's all we get? We've seen that before. We've seen the market rally 1,000, 1,200 Dow points to go back very, very quickly. And the market, if it gives it up, it's going to give it up probably today or tomorrow and start, down sharply. The first indication would be if we got below 25.85. That's almost 100 handles, off the high we made yesterday, 80 handles. So that's a huge move. So we gotta watch them really close in here, because we're at a really critical level. When you see the market drop 10% like it did over that 2-week period, that's important. Now, is it the greatest buying opportunity of all time? I don't know. I believe it was a good buying opportunity as of Friday. I highlighted, 7 different things that said it should stop right there, and it did so far. But the key words there are so far. It's one of those, if it goes below it, that tells you that the market has crested real early in the cycle, and the price objective that we're looking at on this E-mini S&P will just bring this to your attention again to show you here is just, you're right, Terry, you're absolutely right. A 382 is a dead cat bounce. But this cat is no longer a house cat. This cat is an Indian tiger. So you could easily go on our way up to the 61% retracement, or possibly even the new highs. We don't know. That's where you have to try to put the time in context. How quickly did we get here? Well, we made the 382 from an hour before the close on Friday and all day yesterday. We're counting Sunday, which is a little bit. So we have about 2.5 days is where it's rallied, which could be all you get in a bear market. The key to it is how fast is it going to come off? Well, it came off pretty fast. We got up to 2670. We backed down to 2637. and that's what 20, about 30 handles. So once we start breaking below that, then that might be an indication that we're getting ready, to go a little bit lower. But right now, the jury says that we still have some more to go on the rally side. Personally, what I would like to do is to see some nice swings, pretty much like what we're seeing right now, maybe even a bigger one. But you're right, Maria is posting there that 2620 is the key, which is yesterday's low. And if you remember, when we were trading at 2645 yesterday, and the market was up 300 and some Dow points, it went from 368 Dow points to up 68 Dow points. It dropped 300 Dow points. We dropped 40 handles in the S&P, and then went back in an hour to make new highs. So those are the kind of markets, that you're looking at. So we'll see what's going to go on. Mr. Z is telling us here in the Tiger Den today that there's some drought monitoring going on in several states, and I'm certainly aware of that because we're watching the grain markets very, very closely. The meal market in particular has been a huge mover for us. We focused on that in the newsletter for commodities this past week, and it's had a really big move up into this. I think we should actually show the folks this because, we got to talk about, let's forget about the meal because it's already, we're all ready to see what's going on to come. You're right. You got some really smart people here in this Tiger Den, folks. Maria was talking about the 2620 level in the S&P. That breaks. You're looking at 50 handles, and Bob is absolutely right from Spokane. That would be the 61% retracement of that move. So these are key levels to look at, and that's what pattern recognition is all about. It's not about how much money you're going to make. It's how much money you have to risk to see if you can make the money. Because in the risk-reward equation, the only thing that you have control over is the risk. You have no idea what the reward is going to be, and you have no idea on what the outcome is going to be. You have some probabilities you're looking at, but they are probabilities, and that's all they are. You can't take probability to the bank, boys and girls. That's the whole key. So remember that as we look at those. We talked about yesterday something very big potentially happening in the natural gas. If you remember, we were talking about this potential double bottom down there at the 255 level. We've now rallied 8 handles. We got up to 263 this morning. So that double bottom is most probably in. If you happen to have done that trade, good for you. And make sure that you don't let it go to a loss. Put your stop at break even now, and you just let it ride and see what happens. It would be the same situation where we were, back in December when we were at a 1.27 expansion at this same level. It rallied from 260 to 370. That's a lot of simoleons, boys and girls. That's a lot of money. Let's pay a few bills. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to change gears here for just a minute and move over to one of the old livestock markets. And that is the, by the way, today is Fat Tuesday, folks. We're getting ready for Lent. It's a big time in New Orleans. Of course, we have Ash Wednesday, I believe, is coming up pretty soon. And, of course, the Mardi Gras will be starting in one of my favorite cities in the whole world. But let's take a quick look here at the live hog market. This is one that we were focusing on in the newsletter last week. And as you can see, we went right down to that ABCD pattern there at that 68.75 level. And we've had a pretty strong rally. We rallied 2 points off the bottom. That would tell you that you certainly would like to, keep your stop at break even here, because the fact that we've had a good move, we had the same thing happen, in early February, just a week ago, and then the market turned around and came right back to the same level. The grains are still acting extremely bullish. The November beans for 2018 are trading now at 10.16. Those were a really strong buy at the 9.80 level. And so they're all starting to move higher. The one that is still lagging, that is still a good buy, is that Christmas soybean oil at $32. That looks like a really interesting one from our perspective, risking about $600. And oil is 20% of the soybean plant itself, so that can also be a very interesting. Let's just take a quick look here at this soybean oil. See if we can get this Christmas soybean oil up here to take a look at it. Yeah, we're down here now. We're right around this 32 level that we were waiting to see. Let's just get it up here because, and if you'll notice this little cycle that's there, that comes in pretty much today. Here we are on the 12th. This is the 13th, so we're right in the zone of this. It might stretch out all the way into the eclipse date, but keep an eye on soybean oil, because that's a big ABCD pattern. And on a long-term chart, that's still making much, much higher bottom. So that's a very, very interesting one to look at from a risk-reward perspective. Let's take a quick look this morning just to see where the Christmas oil is trading this morning. Let me see, ZL. There it is right there. We'll get this up here to take a look at it. And we'll get in here. Where are we at here? 30 minutes. There we go. Yeah, we're right at 32.59. That's 10 cents under what our price objective was. So I'd really be taking a look at Christmas oil in here, folks. This looks like a real interesting one from our perspective. Now, there's another one here we watch all the time, and that is the gold market, boys and girls. And, you know, we were really bullish gold for a long time. We made that double top up there at that 1365. Where do we go from here? Let's just take a quick look at it from the technical perspective here. Here's where we were looking at yesterday. Let's just get this in here. We'll put this into the market to let you take a quick look at it. And you'll be able to see here that we've completed a rallies here in gold now. We've rallied that's the euro, shut the front door and raise the rent. Larry, I know they trade the same, but that's the wrong chart. Sorry, boys and girls. Here comes the gold market right here because it had something else that I needed to see. I want to put it up here to look at it. That was my bad. Just a minute here. Okay, here's the gold chart, 30-minute. That gives you a look at it over the last couple of weeks. The key here, folks, is if you look at those really dark black lines that you see where the markets are having rallies, those are showing the equal rallies. That's basically showing you the harmonic number that has been working in gold here. We're still in a downtrend. You can see the big ABCD down there at 1312. We rallied from that level. We rallied $27. You know, wait, no, we did. $27 per ounce, and now we're down trading around the 1324 level off this ABCD pattern from yesterday. Boys and girls, here's what's interesting about, I keep saying boys and girls, ladies and gentlemen, it's really important to look at this gold chart right here because of two factors. One is look at the rally between the 30th of January and February 1st, that 2-day rally. Then we rallied between the 2nd and the 6th for 2 days. Now, from the 8th to the 13th, which is 5 days, we've rallied almost exactly the same amount. We completed 2 ABCD patterns right at the old breakdowns from 313.35 level. That's where the market gave up the ghost and broke down. We rallied right back to that. Gold is in a sale, folks, at that 1332 level. I mean, that's I don't know any other way you can look at it. It's in a downtrend, no question about it. On a short-term basis, you're looking at a weekly, sure, it looks okay, but if you look at it on this one, it looks like we're going to have a move at least down another $13 or $14 down to 13.17, and if that should fail, you're looking at a monster ABCD pattern going from 1347 down to 1307. That's $37. Da-da! There's the harmonic number of 34, and you subtract that from your 1332, you're trading it under 13 handles. You'll be down at 1298, boys and girls. And, you know, that's getting close to the longer-term price objective that we're looking at in the gold market. So this is important. Now, if we get above 13, if we close above 1335, which is $10 away from where we are right now, that's going to tell us that this thing is most probably, you know, getting ready to, you know, break out to the upside. We'll have to, you know, change our strategy. But right now, I still think we've got another $25 to go to the downside, you know, on the gold market. But let's just remember that. Now let's go. Since we were talking about the euro and I posted it, you know, let's just go to the Treasury bonds, folks, because that's where the real the real action is here on these markets. But we are, you know, we've had a little bit of a bounce here now in the just like we were hoping. Well, that's a terrible trading word, but we take a look here at the bonds here on the daily chart. We've had some support. We're looking for a minor 3 to 5 day rally here. Would like to see it get up to 146, but frankly, I think that's a little bit too optimistic. The last rallies we've had in these have only been about 2, possibly 3 points. Well, that with 146 would get us there. That would really be a good area to look at it. But even a better area, if you could get it up to that 147.5, that would be a really nice place to look at the bonds. Bonds and notes are going lower, folks. Interest rates are going to go higher. I don't know if that's going to have much of an effect on the stock market longer term. We hear it both ways, but frankly, these charts on the bonds and notes, you just can't, if you look at them, they just look bearish, and they've got targets that are far, far lower, i.e. higher interest rates. So all of that is telling us that interest rates are going to go higher. So watch that very, very closely. Look for little rallies in order to get short those bonds and notes, because they are going to go lower. And with the federal government, going more, another $1 trillion in debt, that's not good for the bond notes, folks, because somebody's got to be paying the interest rate for that. And when you need money, they charge you more. When you don't need money, they charge you less. That's from Bernard Baruch, his autobiography called My Own Story. 877-927-6648.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we've got a caller from Detroit, Michigan. John, are you there?
I am here, Larry. How are you? Love your show. Love listening to you every day.
Well, thank you very much. I appreciate the kind words. What can I do for you today?
I just wanted to throw in and add to something you just said about when, you need money, interest rates go up. When you don't need it, it goes down. Years ago, I was in the mortgage business, Larry, and I used to tell my clients a little tome that Will Rogers said. And this is what Will Rogers said about banks. They only want to lend you money when you can prove you don't need it. And that goes exactly with what you were saying, Larry.
That's exactly true. these banks, even with interest rates going down for 32 years, all they've done is to raise credit card rates, all during that time. So they're not a very beneficial organization, as we well know.
Right, right. Hey, Larry, quick question on silver. Silver has really been a laggard here, and
yes.
Thoughts on that?
Well, that's one of the things that we were afraid of, when we weren't afraid of it, but at 1365 when we were breaking out in the gold, we were just barely making, a 78% retracement in the silver up that 1730 per ounce level, and we were seeing, signs that it just really didn't have any power at all. The open interest was dropping. I mean, there was just no buyers coming into the market. So my assumption here is we're probably going to get a washout probably somewhere below 1,300 in the gold and probably around $15. Maybe it might even go tad below $15. But below $15, I would have to be a strong buyer of silver, I would think. But I think that's what we're possibly looking at, is one more washout before we start to go higher.
And you keep hearing that silver is an industrial metal. It's used in solar panels. It's used in iPhones. Could it be that the price of silver is getting kind of squashed because the new iPhone 10 is not selling like they thought?
That would be a really small amount because, there's a lot of silver and not that many iPhones on a relative basis. But thanks for calling in, John. Really appreciate it. You bet. See you tomorrow, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.